Good morning, traders. It is 8:01 a.m. Chicago time on Monday, the 4th of April, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall picture, as it stands right now, is with crude oil being slightly down, gold slightly down, bonds up, tens up, and the Bunds flat. Nikkei having finished down slightly, same with the Hang Seng, and the Shanghai finished up slightly. And Europe is up across the board. The ES slightly up and US dollar down. The market seems to be allocating to risk. Risk appetite continues from Friday's trend day up. The key positive news overnight: European unemployment's at its lowest in almost 5 years. That came out at around 4 a.m. Chicago time, 10 Eastern, 10 a.m. Eastern. And then for those who trade oil, another piece of news is the Iranian oil minister at approximately half past midnight Central, half past 1 a.m. Eastern, just before the European Open, said Iran will take part in the Doha production freeze after daily production regains pre-sanction levels of 4 million barrels per day. Exports have already surpassed 2 million barrels per day with sanctions lifted, so they're about halfway to the production level they want to be at. So as I look at we'll look at the oil chart in a minute. As I look at the oil chart, it seems like it's not likely to get too much traction with that in the headlines, depending on, of course, what happens in Doha. Overall, what are we expecting for today? We're looking for several numbers, key numbers at 9 Central, 10 Eastern. Before that, we have ISM New York at 8:45 Central, 9:45 Eastern. There's no expected number. Prior's 53.6. At 9 Central, we're getting durable goods orders, durable X transports, cap goods shipping something. I don't know where these numbers are coming from. The ones I care about is the durable goods orders, and that's a medium tier number. And also factory orders expecting negative 1.7%. We also have Fed Speaker Rosengren at 8:30 Central, 9:30 Eastern. Other than that, the schedule is fairly clear. Since it's Monday, looking ahead for the week, tomorrow, German factory orders, Eurozone, UK, and German services PMI, Eurozone retail sales, US trade balance PMI and ISM. Wednesday, German industrial production, consumer PMI, Fed's Mester and Evans, Bank of England, March meeting minutes. Thursday, UK Halifax, jobless claims, construction credit, consumer credit. ECB's Draghi and Constancio are speaking on Thursday, Fed's Kaplan. And on Friday, German's current account, trade balance, UK trade balance, industrial production and manufacturing, and U.S. wholesale and Fed's George. So based on that, the week has fairly consistent medium to low tier numbers throughout the week, distributed throughout the week. There's nothing here that is key other than Thursday we get Fed's Kaplan and Fed Chairwoman Yellen speaking. So Thursday is a key day this week. Other than that, that's what we have here going on for this week. Let's switch gears and look at the technical picture. So I wasn't here Friday. Interesting trade, not my kind of trade, but some interesting things to take away from Friday's session. Let's quickly review, since I wasn't here, let's quickly review Thursday's primary hypo is for it to sit in the balance after popping up on Wednesday, and to chop around. That was the primary. The secondary hypothesis was a response of buying into the prior day's value area and then a drop down to around 47. When we look at what happened here on Thursday was pretty much exactly what took place. Here's Thursday right here. We have a pop up into the prior day's value, chop around, and come back down to 48.75. Couldn't quite test the gap zone high, so it stood just just a few ticks ahead of that before it popped up to mid and sold off on the close on fairly strong volume on that sell-off. Um, but the next day, so that's Thursday, uh, with the 2 days balancing with each other, I built a micro composite here that encompasses Wednesday and Thursday. This is Wednesday, this is Thursday, and Friday's right here. Uh, when you put those two together, you see that the point of control, the MC point of control for this area, the most traded price or the most accepted price is 20.57 even. When we come into Friday, we have a gap down. The market attempts to go lower into this trend day from Tuesday. This Tuesday trend day definitely crushed a few people. I've seen a lot of sellers on that day. It pushes down almost to the LVN, to the key LVN, and it bounces right off. The key LVN was just a couple ticks below the 35 and a quarter, and then it finds its buyers. And where does it go? It goes right to the point of control, right to the MC point of control, rotates down 6.75 points. Before it finds a base. It cannot re-enter the initial balance high, cannot get out of the 2-day balance or this micro composite, and so it continues higher with volume, as you can see here, volume being strong throughout the day. The bars, the green and red bars, are higher across the board than the yellow bars. The yellow bars here represent a 20-day average volume for that particular time slot on a 15-minute chart. But the initial opening swing was pretty small on Friday, just 2 points. Tested below on an open auction, and then just shot straight up. And what we have is a very classic trend day. There's no consensus on price. There's no real, the only balancing that took place was where you would expect it, which is right inside of this MC, this prior acceptance area, and then the market just continued higher and did not form any value. This value area here in gray is invalid, even though the program puts it on here because it's doing it mathematically. You have to step back always as a trader and consider if the information makes sense. And overall, it does not. On a trend day, there's no such thing as a value area on a trend profile. With the market balancing out on the close as we usually expect, a weak high, look at this high, lots of volume all the way through to the top tick. Weak high, point of control at the top. What do we expect? In the overnight session, what do we usually expect? We expect it to continue higher in the Globex session, and it did, and it pushed to 71.50, just 3 ticks short of this naked point of control from way back in December. So overall, the market is in a very, very strong trend, as we had talked about. I mentioned this a couple of weeks ago. For those who've been around and listening every day, you probably caught the analysis showing that a break above this 2015.75, if we break above the 2015.75, retest and hold, then the expectation is for the 64.75 area. Here's the 2015.75. Here's the push through. Here's the pullback. Here's the hold. Here's the continuation. Back in balance. Back into these black lines here. These are micro composites. And then the expectation is we chop around in here. attempt to go lower usually, and then that gives us, we advertise price lower to find buyers, and that gives us the base to continue through to 2100 as the next key test area. I'm not saying it is going to go there. I don't know. I don't have a crystal ball. But this is the normal habit. If we flag here and then continue through, then the expectation is we start climbing down the other side of this volume mountain, and the other side of this volume mountain is the 2100, the 2100 all-time high. Okay, that's how things are shaping up. As I said, as I warned a couple weeks ago, if you're short through this 2015 area, this is a pretty important area to watch, pretty key line in the sand to watch, and here we are. So that's what has occurred. When I encompass, because Friday engulfed the entire MC range here, it opened below and it finished above. I have to extend this profile out, extend this microcomposite out, and it does not change the point of control below. The point of control remains at 2057, and this profile looks pretty thick in the middle here. Buyers are likely to remain in control as long as we hold this this area here around 2050 being the key area to hold for buyers to continue higher in the short term. So that's how things are shaping up. When we look at the overnight session shows that from the open, a quick sell-off, and then from the open it just drifted up. But the profile is showing a lot of volume higher than Friday. It's showing most of the volume occurring higher than Friday, 273,000 contracts. That is slightly more than what we would expect to be the common volume for the overnight session, and it's exploring these prices all the way through. So it's finding consensus up above these above Friday's high, and it's looking fairly strong. It's attacking the mid right now, but it's looking fairly strong. There's a week high at 71.50, and the overnight session is indicating that there's a ton of energy to dissipate here. The overall balance in the overnight session is slightly bullish, but slightly on the buy side. The overnight inventory slightly on the buy side, but not by much. So as we open, it leaves us in a spot that's a little odd to predict a probability on. We are back almost at the closing price from Friday, and that's also the mid area of the overnight session. So it's very, very hard to tell what is likely to happen on the open. I expect a pretty choppy open, especially since this is the Monday after the unemployment Friday. So I expect this to open, chop around a little bit, and I expect it to attempt to go lower. We do have a week overnight high, so there's a pretty good opportunity for it to go and test that. The ideal trade, the big trade of the day, the ideal trade for the day for day traders is for this to chop at an open auction and then push to the high, attempt to hold the high, sell off, and then target 2057 from approximately 2067. That would be the ideal trade of the day. That's what I'm looking for as hypo 1. Okay, hypo 2 is a chop, a drop, and then chop around, and then just slowly drift up to continue the trend that we've been holding. We are in a again, Friday was a strong bull trend, strong engulfing pattern here. I expect it to continue higher eventually. It may balance for a day or two, especially today, but hypo 2 is just that. Hypo 3 is a test higher and failure, and then just basically chop around in here. That would be hypo 3. Again, the Monday after Friday's non-farm payroll generally is not very eventful, generally has a pretty tight range, and both sides just kind of sit it out for the session, but we'll see how that goes. A quick look at crude oil is promised here. If we look at the day session only, so this here is the overnight session. And you can see that it's in a short-term downtrend on the 15-minute. If we look at the day session only, it's much clearer that this market is making its moves overnight and is resting during the day. But overall, it's in a pullback, and it's likely to continue lower. It's likely to continue lower into this small volume node that is beneath here. So we're looking at these days being the temporary support. This is basically the bigger time frame zippers, what I call it, that the market's likely to lean on. So my expectation is this is likely to continue to drop towards 36.14 and 35, the 35 handle, before it starts to find a base and starts to turn up. And that may coincide with the OPEC meeting in Doha. I'm not sure. But overall, you can see as it drops, as the market drops, it's not able to immediately refute the lower prices by finding buyers. It did so back here, but it has not done so all week last week. It is basically trending down, and it's in a pullback right now, and that's how oil is shaping up. It's an interesting trade. It's got a fair amount of volatility still. Some of the best action right now, in my opinion, is in crude oil. As always, watch your risk. Anyway, that's what I had for you for today. Good luck, and I'll catch you tomorrow. Take care.